Hey everybody, and welcome to this Virtual Vision Finance Expo webinar session. We're so glad that you all could make it today. My name is Rachel McIntosh, and I'm a cryptocurrency journalist and podcast host at Finance Magnates, and I'm the moderator of this panel. Our panel today is entitled Fintech and the Future, Technology for the World We Want to Live in. And I'm so excited to have here with me today some of the fintech and data industry's top thought leaders and experts, and very pleased to introduce you to Zak Selbert, who's the founder and chief executive of Indexica, Will Martino, who's the founder and chief executive of Kadena, Roel Wolfert, who's a serial entrepreneur and the chief executive of Shareitt. He's also the founder and managing partner of VGRIP, and Michael Charalambides, regional partner and director of ECOMMPAY. So I'll let them all introduce themselves a little bit more thoroughly in a moment, but before then, our discussion today is going to focus around the impact of COVID-19 on the future of the fintech industry. So it's been argued that the coronavirus has kind of had a silver lining for the fintech industry. And in a way, for the whole world, the coronavirus was a sort of pause or reset button, and that has provided us with an opportunity to rethink the world and how fintech fits into it as we move forward. So we kind of have an opportunity in the fintech industry to rise to the occasion. So now that fintech systems are sort of more in the spotlight than they have ever been before, how can we as an industry work to build better systems that will last beyond the pandemic? And how can the technology that we have to work with, including fintech and data analytics, be used to build a world that we really want to live in? So before we get into all of that, let's take care of a quick housekeeping thing. We'd love to hear from you during today's presentation, so please feel free to leave your comments next to the video and tell us your thoughts. We'll be answering questions at the end of this session. If we don't get to your question during the webinar, we'll be sure to do our best to follow up with you afterwards. So without any further ado, I'll ask each of my panelists to introduce themselves a little bit more thoroughly than I've introduced them. So we'll start with Roel Wolfert.
Yes, hello everybody. My name is Roel Wolfert. I'm 25 years in financial services and technology. I've held a variety of positions in startups, scale-ups, and large blue chip organizations. 7 years ago already, after I left Visa Europe, I moved into consulting, and especially in financial services technology, blockchain related matters, cryptocurrencies, digital assets, and I've been actively involved in the payments industry and securities industry as such, not only as an advisor, but also as an investor and, owner, entrepreneur as such. So coming from that, I think, I really would like to articulate today the importance of innovation as well as cooperation, which is still essential, according to my mentor on innovation, Mr. Henry Chesborough, who is the father of open innovation as a concept. So I'll leave it with that, and Rachel, or hand it over.
Thank you, Roel. Yes, we'll continue with Zak Selbert.
Hi, I'm Zak. I'm calling in from Los Angeles. I'm the CEO of Indexica, and my background ranges from investment banking to data and analytics, which is what Indexica does. We try to make sense of the world around us by reading the news using natural language processing. And we're definitely seeing more interest in this type of measurement tool during coronavirus. So I'm excited to tell you all what we think the world will look like in a couple of years in terms of trying to make sense of it. Thanks.
Yeah, thank you, Zak. Michael Charalambides.
Hi, I'm Michael from Nicosia, Cyprus. And I'm a director in ECOMMPAY, which we are amongst the top 10 acquirers now currently in the region, and also the CEO of ECOMBX. During this period, we have established a lot of new grounds due to the COVID issues, and we have seen our part where it comes to digitalization into the banking sector to actually radically grow during this period. We have in our group, we are doing both anything that has to do with fintech companies in terms of acquiring, issuing, and processing of card details, up to the issuing of IBANs, SWIFT, and SEPA participations into the banking industry. And I'm more than keen to welcome everybody to the IF Expo booth whenever that happens and have discussions in person.
Thank you so much, Michael. And last but not least, Will Martino.
Thanks for having me, Rachel. I'm Will Martino. I'm the CEO and founder of Kadena. I got my start in crypto and fintech about 10 years ago, a little bit less. I was at the Securities and Exchange Commission, where I was a lead engineer for a quant group that built the now nationally deployed forensic data analysis toolkit. And when I was there, Valerie started the crypto working group. So I was the tech lead when they founded that group. I then left the government, went to JP Morgan, met my co-founder, Stuart Popejoy. We built their first blockchain called Juno after about a year of R&D and also vendor vetting. And we left JP Morgan after rolling out JP Morgan Coin version 0, because we had this suite of questions that we knew we needed answered at a technical level before we could really drive decentralized trustless platforms forward. And we spent about the last 4 years building that. We have a hybrid blockchain platform that is a private chain that's high performance, a smart contract language that runs on our private chain, our public chain, also on Tendermint, and hopefully soon to be on Polkadot as well. That is designed for lawyers and executives to be able to read, if not write, but also for developers to be able to express themselves quickly and safely with full formal verification and all the suite of tools that you wish that you had right now in crypto. And we recently launched our public blockchain, which is Chainweb. It is the first scalable, really is the first sharded protocol to ever hit production. It uses proof of work and multiple chains in one network to get beyond the issue that we've had since the beginning of Bitcoin, that there are only so many transactions that one blockchain can do. Instead of that, we have multiple blockchains, and we braid them into a rope, and it's one network.
Excellent. Okay, so I want to address this first question to all of you, but we'll start with you just for logistical reasons. So now that we're 3+ months into a mostly quarantine world, how has the work that you or your company is doing been directly affected as a result of the pandemic? Or maybe another way to ask this question would be, how has the pandemic changed the way that your company sort of thinks of itself and envisions its own future?
Mm-hmm. From a business point of view, we started to get affected around December, January. There had already been kind of a lull in listing, and we had launched our platform back in October, November, December, January. There's a multi-stage launch. And because we have a number of contacts and I fly out to Asia for business reasons a couple times a year, we heard about what was coming through Hong Kong and through Wuhan, but I actually had friends on the ground who I was talking to and saying, hey guys, is this real? And they're like, yeah, it's real and it's serious. So then around, after we launched our platform fully in January, we started to pivot the company to go much more remote. Because of the core R&D we needed to do, we thought we needed an HQ. But now that we had launched the full platform, we wanted to move to a more distributed, decentralized organization, as opposed to something that has this core office that we all come to every day. And there were a number of reasons for this, but part of it was just that we could, and we knew how to. We built this trust over the last few years with the core team, and we knew what we needed to do this year. So we started going remote in February, and we're fully remote by March 1st. Okay. And then Corona just comes and slams into the world, and we go into this lockdown period. So we were actually fully prepared. Everyone had a home office set up. We had already migrated out of our office. Everything was basically ready, and we had already been doing cultural things to really prepare the team. Mm-hmm. The way that it changes what how we see ourselves is that Bitcoin and cryptocurrencies came out of the last financial crisis in a big way. I think they still would have existed without the 2008 recession, but they wouldn't have meant the same thing. If you look at Satoshi's initial posts and the conversations in the early Bitcoin forums, a lot of it is around quantitative easing. And now I have an economics background from Yale, so I like quantitative easing if it's part of a multi-step process of unwinding the big banks and doing a big stimulus package. But QE is stop the bleeding, that type of thing. So I like that from the point of view of from my economics background. That being said, that's a big part of the story. And now that we've seen coronavirus came in and it just exposed all of the weak points that we have in our institutions. Then all of a sudden, these institutions that we're supposed to trust, the CDC didn't give guidance to wear a face mask back in February, and it should have, but it didn't. And it didn't even do it in March, only recently. And that's that degrades public trust in these institutions. So the way that we see ourselves is we have a platform that allows you to have a trustless backbone. So you can actually deploy trustless applications. And I only see the need for cryptocurrencies and decentralized applications getting stronger over the next decade, because people aren't going to forget the minor hell that all of us have just experienced, and the major hell the people who have actually like gotten sick or had loved ones die have experienced, or have like lost jobs have experienced. Like all of us are affected, but some people have been affected far worse. So we see ourselves being able to service that niche of being able to offer an alternative to the big centralized institutional systems. We can actually have a globally distributed, trustless, decentralized platform that is built by people who have 30 years or 40 years of combined fintech experience. So we know that it will work in production. We know that it will scale to our needs. And it really is this profound opportunity, because we have this pause to rethink, like, do we need this? Do we need that? Can we move to something new? Can we move to something better? Do we really need to go to an office every day? I think the answer is, for a lot of people, is probably no.
Yeah, definitely. Who wants to jump in next?
Oh, hi, it's Roel, Rachel. Yeah, so what has really happened now, we weren't necessarily so prepared for COVID-19, being mostly with Shareitt. We're based in Israel and Amsterdam. Of course, you hear things, you see things coming, but again, from a working perspective, internally, it didn't really impact us because we're an international team. People are used to working remotely with people in Netherlands, in Israel, in Ukraine, and all around. So obviously, you start missing some of the social aspects of missing people, meeting face to face. But I think also, we saw an increase internally. I think, there's maybe more effectiveness happening around what we do, because it takes quite some energy to sit in front of a Zoom, a long time. So meetings are maybe, a bit shorter, more focused. And I think that is really helpful. Now, if you look at what we do with Shareitt, because we are a marketplace platform for communities, where communities can start and run their mini economies as such, and whether that's around volunteering or reuse of products or things like that. And I'll give you a very concrete example. Although the market is slowing down, people are rethinking. I sat in a call this morning with a potential customer, the CEO of that organization, and she literally said to me, if you had told me this story 3 months ago, I would not have bought it.
Yeah.
You're telling it now, and it's so logical what you're doing. Yeah, bringing people together with technology, enable them to earn additional spending income, enabling them to really connect and help one another through technology in close vicinity, is truly become valuable in this world. And so I think that Corona as such has really emphasized, what we initially thought as small cracks, whether that's a monetary crack or a social cracks or healthcare cracks. Corona has shown it's not small cracks, it's huge gaps. Yeah, and to one side, it's very unlucky that the outfall of the pandemic is going to be a huge economic recession, but at the same time, it's going to be, there's no hiding for nobody. So we all got to move, and to earn a living again, to get our place in this world. And hopefully that brings an opportunity to make it slightly better on an environmental level, on a work-life balance level, on economic models and how we use and do business with each other, etc. So first 3 months, initially I was like, I think like most CEOs or business owners, you go like, okay, what do we do? Yeah, so you start thinking really fast, because nobody is really prepared for a pandemic. Yeah, you're prepared for worst case, economic scenarios, maybe a lot of other things, but I'd never realized that a pandemic, that we could actually shut down a country or multiple countries, half the world, in a matter of weeks. That has happened. And the good news is everybody's, in our companies at least, and our customers are very positive. We picked it up, we turned it around, we created new products, new ideas, extended it. And as I said, look, our clients appreciate it. And actually the market, because of what's happened, has accelerated to a new thinking, and that new thinking has helped us to deliver innovation in a timely fashion. So, actually, it's maybe weird to say it, but COVID has helped us because we needed the market to accelerate for our product to become relevant. And I think that's happening right now.
Yeah, absolutely. Zak, what do you think? How has this changed the way that Indexica is working?
Well, from the standpoint of how we're working, our team fortunately has always been distributed. We have people in Brazil and Portugal and Austria, and I'm in LA. So there was never a change at all to where we worked or how we work from a productivity or efficiency standpoint. So that was probably just lucky for us. I mean, I come from also a background in commercial real estate, so I have a good sense of why people need to go to the office, why people need to go to a hotel or a retail center. And that's definitely an industry at whole, which is really getting hurt at the moment. Why people need to congregate or not now is really something that we're rethinking. At Indexica, that wasn't really an issue. So it was more a question of, does our product still serve a need in the market? And the need in the market pre-COVID was to the investor community. How can they measure what's happening in the world around them? And how can they use that to inform investment decisions? So we generally serve hedge funds. Oftentimes they're completely quantitative, but sometimes they're what's called quantamental, which means that they look at quantitative data at the same time they do real world human thinking, and they try to mix those two things together. And generally in finance, we look backwards when we're trying to look forward. So we look at what happened in 2008 or in 1987 or something like that to find a parallel. And when this started, there really wasn't a great parallel unless you went back over 100 years to a pandemic that really affected the way that people work. The few that have happened, the other, SARS and these types of diseases weren't really that big. So there wasn't something to backtest, quote unquote. So we immediately realized that our clients wanted to measure what was happening in the world in a new way. It couldn't just be normal data that they had to look at. They wanted to look at, text coming from China to really understand what was going on there. They were looking at alternative data such as, how many people are in parking lots, what's electricity usage look like. So the alternative data space probably went from being alternative to just regular data, I think, during this time.
Okay, yeah.
There's no other way to measure what's happening in the world now without looking at all these new ways of measuring it. It's not that the world has changed so much from your ability to measure it. It's just that now you can actually measure it in these new ways. So previously you could look at parking lots in theory to see how full they were, but now it's really an easy thing to do. Indexica's take on it is to read news from everywhere in the world, 25,000 sources on 10-minute cycles. So if something's going on in Wuhan, we're going to know about it right away. And if something unusual is happening, we get to pick up on it. So at first, our clients were kind of freaking out because the market went down 30% in a couple of weeks. And we weren't sure sort of how we would fit into this new world. But as people started realizing that life would go on, and what they really needed to do was understand how the changes that were happening around us, region by region, we started to see a pickup in interest in our indexes and our metrics that are not only measuring, but also trying to understand whether there's any predictive power in this text that is measuring what's happening in the world around us. So we hope that that will continue. Unlike the other panelists here, I think we have a little bit of a different angle on the fintech community. We're not in industry or crypto or something like that. But what we hear about from our clients and potential clients on a daily basis is just what's happening in the world, how can we measure it, and what impact will that have on markets? And that's what we do by reading text. So we're hopeful that that will continue to be of interest to people as alternative data goes from alternative to just this necessary.
Right, absolutely. So Michael, I want to pose the same question to you, but I want to add also, sort of pre-pandemic to post-pandemic, what is the most notable way that the ways that individuals and societies are interacting with fintech and with your company's technology, the most directly? What has changed sort of pre to post-pandemic?
Well, firstly, I would like to say, boy, do I miss having physical panel discussions. I mean, guys,
this is different, isn't it? Yeah.
It's killing me. In all seriousness, I mean, we are all fintech companies, and we do come from the fintech world, and it's all about making automations. But I cannot hide it that I miss the physical contact with people, the interaction with people, traveling to other places, and actually getting a better grasp of what's happening. Because first things first, I mean, a company is a living organism. The reason it's a living organism, I mean, if we go back to the basics, it's because it's run by other living organisms, which are the human beings. So if human beings are not really interacting between them, they're not making everything as alive as it should be. And on a professional level, I don't know, guys. I'll be a bit off the question here. I do miss a lot the times pro-COVID in terms of physical interaction. I do think it was always better for business. I mean, we can all say that there's good outcomes for our fintech companies during the COVID period. I mean, naturally, automations have nothing but paid off the bet during this period of restrictions and making people working through different digital means. But I think that the market needs to be reinstated eventually in order to ensure the longevity and feasibility of our industries either way. So having said that, we are, again, we're not a company that's much involved in cryptos or blockchain technology to begin with. So what we do mostly, we are touching the banking fintech side of things. And I would say that how this affected our industry, or at least our companies, is that during this period, the bet of having as a peripheral banking service, what has actually paid off our bet is the fact that we have a balanced portfolio mix. So the fact that banks are afraid to actually touch the fintech world, whether it comes to Forex, SIFs, cryptos, blockchains, gaming, gambling, betting, name it, anything that has to do with fintech, the banks are always afraid to touch this industry. We are offering, as I said, peripheral banking services with a mix, a variety in our portfolio mix. The legislation and everything led us during this period, and the frameworks have led us to focus more onto the retail and physical products. If we actually follow this protocol according to regulators and the best recommendations that we should have, and we actually focus most of our business towards the retail or the tourist product or other physical things like other banks are doing, today we would be having the same problems that systemic and retail banks have. We would be failing. We would be having a decrease in our income. We would be fearing what the next day will bring. Rather, everything now has increased in terms of revenue, and we've seen a better picture of things. Because of the automations we're doing into the industry and into the banking sector as well. For example, we specialize on business-to-business bank accounts, or IBANs, to be more accurately precise in terms of legislation. So this digitalization in the onboarding process of legal entities has actually paid off the bet, because we had a lot of companies during the COVID period boarding onto our services and getting new clients because they couldn't actually physically visit the bankers or do it through the banks. The banks were totally unprepared for this. So we had a good new increase of new business during this period. Second, the companies which have which had a lot of transactions during this period were companies that had to do with the volatility of commodities and different investment products. So where we have seen a big decrease in the companies that have to do with retail Forex and SIFs and commodities, they were actually decreasing during the previous 2 years. It was like a slow decrease or a stagnation of the industry. Now it has been a huge increase because people are reinvesting into this. And also we have seen a big shift from the sports betting companies into the Forex and FX transactional business, money transactional business, because there were no events happening. So the automation in the onboarding of legal entities, and as well the investment of our portfolio mix into the different fintech companies, have shown us that this is essential for the banking industry to survive, to actually have a variety and embrace, as we always say, the risk, whether it comes to, and this is where I want to stand corrected as myself for the past, whether it comes to forex betting or even blockchain and crypto companies. So it's actually good to embrace technology and get all of these companies back on board in order to be able to have a variety in the portfolio mix, both for revenue, but also both for technology, in order to be ready for situations to handle and onboard clients on a global basis.
Definitely. Yeah. I mean, so much has changed now. And Roel, I want to direct this next question to you. So how have you seen sort of more broadly the priorities of the fintech industry changed, and how has that also been reflected in the work that you're involved with?
Well, I'm going to look at it in a little bit remotely, right? So I think when we look at the fintech space and what we see happening, you know, for example, in payments, we've seen the rise of the ones like Klarna or Zip. Yeah, we see sort of digital banks arising, Monzo, Revolut, you know, cross-border payments mechanisms, you know, that are, I would say, technically sophisticated solutions with a user experience that is way better than what we had. Now, from an innovation terminology, we call that process product innovations. Sometimes they bring new business models as well. So in McKinsey terminology, that's Horizon 1 and Horizon 2 sort of transformations or innovations, if we would like to call it. Mm-hmm. Now, that is partially because that's what the customers and the consumers and the businesses actually want. Yeah, so the fintech industry is playing that part. When you look more at the securities industry, you see similar sort of initiatives that have happened over time with online brokerage apps where you can, like in the Netherlands, you have the Gyro, yeah, easy, you have an app and you can invest in shares and things. It's all very seamless compared to, let's say, the larger, more traditional players. Mm-hmm. What I think this crisis is going to do, because we see that the cracks in society are so big, that there's way more room in the thinking of consumers and businesses. Why would I just innovate a process? I need a radical change, Horizon 3 innovation. Now, there's a number of areas where I at least see some major changes happening, and this is not just related to Shareitt where I'm working, but for example, if you look at the digital assets industry, so you now have opportunities where as an SME, you can just go to the stock market, right? Basically raise public capital. There's a company in the Netherlands called NXchange, right? It's a mini Euronext. You can go there, raise $500,000. Yeah, and get all the benefits that you know, the large multinationals have when they go to Euronext. It just doesn't cost you 20 million, right? So you don't need a bank anymore to get foreign capital when you're a small company and have a debt on your balance. You could actually change your balance sheet by raising equity in a market for 2 million, 3 million, 5 million, 10 million. Yeah, and you know, that suits your need of your company. Now, what they call the financial leverage, when you have the equity, you can loan more, and these sort of SME type of companies can accelerate the growth. Now that is, I think, a major step forward. And if that money is used for innovation and growing, we will see way more competition at the top, so to say. So I think that is quite important. What it also means, and this is more the public interest area, that anybody, you know, will be able to get into a startup, scale up, green initiatives at a very early stage. And it's no longer just for VC and angel investors to get into these sort of newly founded companies and make the billions later on, right? Anybody will get access to early stage funding of startup scale ups or SMEs that just have a huge amount of potential. There are companies, there's a company in the Netherlands called Liquid. Now it's a really decentralized finance, yeah? So really running sort of security tokens, digital assets in the Ethereum blockchain, supporting multinational, you know, shareholdings, loans, cutting out the notary. Yeah, where in the Netherlands you'd need a notary to do a deed, you can now do it for the blockchain. The notary costs you 1,500 euros, the blockchain 50 cents, right?
Right.
So that is really shortcutting a lot of these complicated financial processes and funding systems that will make it possible for companies to get more money, easier access to capital, and that means growth. It also, what it will do, it will make illiquid markets like real estate, or big asset portfolios, you can re-tokenize them and make them liquid. And that means we don't have to print new money, but we can just circulate existing money around, and that will accelerate economic growth, which is something we're going to desperately need, because printing more money is just not the solution. Now, the other thing that I'm seeing as a big thing is that, so many people are losing their jobs. There is now the time and the need to really seriously think and work on universal basic income. Yeah, we already have been saying for a decade, and you know what my dream is, Rachel, right?
What? What is your dream?
Well, you know what my dream is. We spoke about that in Barcelona, but I'll share it again.
Yes, please.
When my grandchild gets born, I want him to be able to capitalize on the day of his birth on the total future value that he will create as a person, so that he doesn't have to be a debt slave. He just knows that, his 5 million worth of contribution on average, he has it on day one. Yeah, he needs to reach some milestones to get access to it, but that would be ultimate, a debt-free life. Yeah. So why always put people in debt? Why not give them everything in advance and trust people to do it right? We see it now happening in the third world sort of donations industry. We don't donate to the Red Cross. They buy goods and we're shipping out. It becomes popular. Just send the money straight to the pocket of the person who's in need, and trust that person to actually do the right thing with the money. And that works. You see it. So the same goes for universal basic income. We've been saying, we're getting, the population is aging, the demographics are changing. We have automation, robotics. There won't be jobs enough for everybody. Yeah, people are unhappy. 30% of the people is unhappy with the job they have. Jesus, that's really like horrendous numbers. So it's time to think. And with Shareitt, we actually build these economies. These communities can have their own currency and circulate that currency. Yeah, and that gives them spending power, buying power. And that's the first step towards universal basic income, right? If you can spend more and you can earn more outside the existing tax system in a fully legal framework, right? Because you just agree with 1,000 people that will use this token to exchange goods. Fine. Yeah. And you just issue it. Yeah, in the community to each other. And if you do that in a very balanced way, manage it like a small economy, then, you have to avoid inflation, you have to do certain things. Yeah, but that is all, made easy in Instagram level technology. So ultimately, when I look there, you see some groundbreaking changes potentially happening in the fintech industry. Yeah, universal basic income. Digitalized assets. Basically, you can tokenize everything and make it accessible without capital barriers for any investor, big and small. Yeah, and we start to see that big financial, we're moving from process and product innovation to big game-changing initiatives. So I hope, because we all know that the ones that generally stop innovation are the ones that are earning a lot of money today. Yeah, so they will do a lot of things to prevent innovation from happening, because then they might lose money. So there's a lot of money spent on defending positions. Now, there's no position to defend anymore if your revenue goes from 100 to 20 in a matter of a day. Right.
And Will, I see you nodding your head a lot and doing some of these. So can you talk briefly about what your perspective on this is?
In previous generations, UBI, people forget, Nixon was in favor of UBI. This used to actually be a conservative, not a progressive idea, because it can shrink the government, because you can trust people to do the right thing, just like Bill was saying. And yes, it is the time. And it's crazy that we're talking about this when Andrew Yang was running for president for the Democratic nomination. And everyone was like, whoa, it's way too early for this. Pandemic hits, and then all of a sudden, we should think about UBI. this seems to work. I mean, the economy, if we don't do something drastic, I don't know how we avoid a depression, just to be straight up. We talk about innovation, we talk about growth, we talk about all of this stuff. I like to tell myself that too, that it's going to be, they're going to come out and it's going to be all right. But if we don't do something big, if we can't go back to the way that it was, we had negative interest rates. The world was on a war path to a climate crisis. This pandemic, I don't like some people don't even realize that this pandemic, when we shut down the economy, we decreased carbon emissions dramatically. It was only 70% of where we needed to go this year, or what we needed to get this year in decreases to achieve the lowest increase in the climate change models. So the whole pandemic shut down the world economy was only 70% of the way there, which is crazy. And is a huge red flag, but of course it's not, killing old people. So, and those old people vote. So, we're not going to shut down the world economy to deal with climate crisis. We're only going to do it for the pandemic. And I am in favor of what we did with the pandemic, but we need something drastic. We can't go back to what we had before, because what we had before was a crisis. We need something new. And if we don't, we're going to see a lot of people in a lot of pain, and the future's coming no matter what we do. And if we don't think smart about it and make big changes and start to go in trust bust, as well as bring universal basic income in, I am very worried about where these things are going to go, because a lot of people just went on this big pause and realized, what, maybe I don't need a Frappuccino every day. Maybe I just don't. Maybe big chunks of service economy. A lot of people didn't know how to cook. They just had a 3-month crash course on how to cook. And now, some people are realizing wow, this mediocre premium restaurant, mediocre food, but it costs a premium amount for the experience, quote unquote. It's I can actually do better cooking now. And the number of people I know who bake bread now is a lot. And that's kind of an extreme example because it takes a lot of time, but everyone I know now cooks. And it didn't used to be that way. I have from an Italian-American family, I'm taught to cook when I was really young. That's just part of my heritage, just what we do. And now all of a sudden everyone cooks, and it's fantastic because I'm not cooking for everyone anymore. I cook with some of the people that I'm friends with, and then I go over to their place and then they cook. And it's we don't have restaurants. So instead we just I have 4 friends and we're just rotating around because we're all in the same little compound.
I'm trying this new thing. It's called cooking. It's so exciting. It's who knew that this was possible? But so Zach, I want to toss this to you. So, that's maybe not quite an alternative data example, but just, sort of something that's happened as a result of all these other things. So can you talk about, how can we use alternative data to sort of make sense of the world, now that everything has changed, and how can we use alternative data to innovate and move forward?
Yeah, so I'm listening to all the other panelists, and I'm thinking how each has an opinion, is stating their opinion, is using all kinds of words that are now common in the news media. And I'm thinking that really what's going on here is what Indexica does on a mass scale, and what alternative data, more generally speaking, is trying to do on a mass scale, which is digest opinions at a mass level. So rather than just 5 people or 4 people, how about listening to 5 billion people, what they think is going to happen, what they're actually doing on a daily basis, and trying to say, okay, suddenly we're talking about UBI. That's a thing now at a level that if we look at previous words that became a thing at some point in the past, have we reached that level? Have we become sort of at that point in time where something's going to happen politically about it? I think that alternative data and natural language processing is just one part of a way to create alternative data. Takes in these changes that are happening in the world that we're talking about right here and says, here's a trend. This is a real trend. It's not just a short-term trend. It's actually happening because here's how it compares to the other 40 times in history that something became a real issue or actually changed the way that we live. And so I think that's what alternative data, artificial intelligence is really capable of doing that the human mind wasn't necessarily great at before. When you have one person reading X number of books or news articles a day, they're going to miss something. And perhaps what they're going to miss is what's going on in China, or what's going on with UBI, or blockchain, or some other aspect of the fintech industry. And that's a problem because you've got millions of investors out there. They need to know what's going on. They need to know the direction that we're going in. They need to understand whether those directions are real or whether they're sort of false starts. And the different ways that we can now measure these trends, these opinions, these feelings that people have, which result in actions eventually, are just completely essential to investors, whether those investors are investing in public markets or private companies. So I think the alt space will really thrive when it tries to make sense of panels like this. I think that's really where it will do well.
That's so interesting. So Michael, speaking of trends, can you talk a little bit about what you're seeing from your perspective? What do you see as the most important trends that are happening in fintech now, and what's going to continue to grow over the next year?
Well, okay. Basically, we're discussing here, it's two-sided. So one part is the social trends, and as correctly some panelists said, the approach of people in their social life with all of these changes happening, and the other is based on the specialization of each one of us in the industry that we operate. So when it comes addressing the question of social trends and how people are seeing this, yes, I mean, that is quite subjective. When it comes to how each one sees this, I see this COVID issue as a big break to what we were used to in our daily lifestyles. Right. However, if somebody just right now, as we were talking here, just popped up on a window and said, guys, good news, COVID vaccination, 100% efficient, and medication that you can actually heal yourself in 24 hours as soon as you get infected with this disease. How much will we still be having this social discussion, whether it's good to have people in isolation or restricting this interaction between human beings on a cross-border basis? I think that very soon all of this would be forgotten and people would again be back on the streets and interacting and traveling and doing the full consumption that they were doing. But I would say that we would be doing this with a much more social conscious, or at least environmental conscious than before. But I think as human beings, we're a curious creature. We're an adventurous creature. We would still like to travel. We would still like to interact and mingle and discover and go to other places. At least if this stops happening for humans, I think we're going to be condemned anyway, one way or another, because we'll even stop exploring the universe and finding alternative ways of surviving and existing and not becoming dinosaurs ourselves. So technology is good, but it's always good when you do have the full freedom in terms of supporting it on a human factor. It's like virtual reality, I would say. It's the same thing. Virtual reality is nice, people are using it, but it would never actually replace the essence of real life itself, the passion of real life, I would say. Now, in terms of business, what we have seen, and as I said in the beginning, one of our biggest investments now as a group, as ECOMMPAY group, is ECOMMBX, which is entering into the challenger bank and neobank fintech banking industry, as I said in the beginning. So a big trend that we have seen is, first of all, we had all the banks, which, as you guys correctly identified, had all of these negative interest rates and negative Euribors, at least in the European Union. And this was affecting a lot the deposits and how the banks were behaving their liquidity. Now, this has escalated through COVID by a lot of the companies losing even more trust into depositing their money into systemic or low rating banks. And we have seen a lot of that shifting into fintech companies where they will feel that the liquidity of their funds is much more readily available. And also we have seen the traditional banks starting to work and play nicely with fintech companies like ourselves. I mean, during this period, we have managed to communicate with a lot of the big banks in Europe, and we managed to interact and create enhanced relationships because they're looking more into the fintech industry. So I would say that the banking sector overall has been affected in terms of embracing fintech a bit more than it used to before, because it was always considered to be challenging the banking frontiers, whether that's on a technological, whether that's on a market share, or on an AML basis, because whenever you tell them the fintech word, it's like you're blasphemy. So in this case, I would say that they're playing better with us. Clients are very concerned in terms of in terms of where their money is deposited now. So we have seen them that they're always asking what the rating of a banking institution is, what the availability and liquidity is, what the Basel III risks are. So it's things like you didn't have before into the industry, and a lot of the big companies which have high liquidity and deposits are very concerned during this period.
Okay. Thank you, Michael. So we're getting towards the end of our discussion, so I want to go ahead and take some questions from the audience. We've had quite a few questions coming in. So this is a question for Zak Selbert. How can investors use data to adapt to a post-COVID world? What do investors need to know?
I don't think my answer to that is too different from what I said before. So
okay.
I'm not trying to be revelatory to the question asker, but I think things are changing. We know that things are changing. People are staying home. They might not be going into the office. We're changing our buying habits, our social habits, whether that comes back to a normal world post-vaccine or not. Whatever happens, people need to be measuring what's happening in the world around them. And they need data to do that. They need all different kinds of data to do that. They can't just look at market data, revenue data, typical data that 10 years ago was on the purchase list for every hedge fund and big investor out there. They need to be looking at what's going on in new ways. They need to look at satellite data. They need to look at textual data, social media data, news data, usage data, credit card data. So all of these things are just ways to make sense of how things are changing. And investors are already, doubling their purchase of this type of data every couple of years. And I think that absolutely that will continue. And I hope that we will also find new ways of measuring what's going on in the world around us, because there's still a lot that's happening that we can't measure. And that will change as we get better at technology that can do the measuring. So previously, everything that was going on in the world was still going on in the world. We just didn't know how to measure it. And alternative data is sort of a way of measuring it. And I think that will increase, and the demand for that data will increase.
Okay. Another question, I want to start with Will, but as always, anybody feel free to jump in at any point. So Will, from a blockchain perspective, do you believe that the pandemic has created more use case, or perhaps made existing use cases more legitimate for blockchain technology?
It's a great question, and it's a bit related to actually what Michael and Zach were just talking about, in that, from an investor perspective, there's this thing that I think that I at least want to mention, and it comes into why blockchain is going to have some more legitimacy. And it definitely it comes to like, hey, if there was a vaccine today, what would happen? And it is, we are on the great pause, or on like the big pause now. And I've heard it talked about online of kind of what comes next. And it's quote unquote, the great gaslighting, where there's going to be a multi-billion-dollar effort by governments and brands and corporates to be, this didn't happen. These are not the droids you're looking for. You never saw the mountains from the middle of LA. That event didn't happen. You never heard birds chirping on Madison Avenue.
So the whole pandemic is like, it never happened.
A great gaslighting to go back to the way that it was.
Okay.
And
right.
Like, from an investor perspective, like, you want to pay attention to this, because like it's either going to work and everyone's going to go back to the way that it was, which has a lot of implications, or it's not, or it's going to bifurcate. And in like blockchain here, there's going to be a chunk of people that say, no, I saw the mountains from LA. And now the brands are telling me, oh, it's safe now. It's normal. Just go back to the way that it was. It's fine. And the governments are saying the same thing. And you're seeing this in various states in the United States, where they're just kind of faking their COVID numbers at this point, because this is an inconvenient truth, sadly, to just steal that phrase. It just is. This happened, and it's really serious. So blockchain comes into here in that, like, it gives more legitimacy to blockchain because it's trustless. Everything's open, it's transparent. You don't need to trust any central entity. You don't have you don't have to trust in the Federal Reserve that their numbers that they're publishing are accurate, and they're not going to go too crazy with QE. And especially if the economy tanks and the market doesn't collapse, because there has to be a recession or depression that comes out of this. And if finance doesn't collapse, then it's just disconnected. And then at that point, there's going to be a whole host of people that are going to have to go somewhere, because the stock market right now doesn't make any sense. How in the world is it doing okay? Unemployment keeps going up by millions of people a year. It broke, in the US at least, it broke the damn chart for how many people are unemployed. It doesn't work anymore. So legitimacy, yeah. Use cases, we'll see. I think so.
Okay.
There's a few technical things that we needed to get past that our platform brings to the table. So like you can use a blockchain back-end app that doesn't, but without having to actually have a wallet. That's one of the core features of our platform. We also have the scale to be able to run that. So you can actually start to have like a decentralized version of Google Forms, for example. Everyone's used Google Forms, but wouldn't it be nice if we didn't have to use a centralized giant? What if we could just have this, global piece of infrastructure that we could just run it on, and it could be anonymous and decentralized? So things like that, we're starting to see now, but for the next 6 months to 9 months, it's going to be the world figuring out, like, did this happen or did it not happen? And some places are going to say it did, and some places are going to say that it didn't, and it's kind of scary.
Well, I think it's really not going to go unnoticed. I think we will see an economic outfall of this that will restrict consumer expenditure in the next 18 to 36 months so significantly that people just cannot afford to just buy. And that's not just because people are getting unemployed, it's also because businesses will bankrupt. Yeah. So if I look here at some situations we're seeing in the Netherlands, like I haven't fact checked this, but I was talking to a person, he said like in bars, restaurants, yeah, there's an overcrowd, which is going to drop 50%. Yeah, in bars and restaurants, that's 50%. And in the Netherlands, we're only 17 million people. There's 125,000 people employed in that industry. Yeah, so that's, a lot of people. All of a sudden, in construction is doing fine right now because the government's investing in large maintenance projects, and everybody can rebuild what they were doing. But ultimately, there's no new orders written on new projects. So we're going to see a fall there. We're going to see falls in a lot of situations. So I think, even if we have a vaccine, which I think, by the way, I don't understand why we talk vaccine here all the time, because it's just about being healthy and having some medication. You don't need vaccines necessarily to move back to a normal world. But that is ultimately the biggest challenge, is that we can't go back because we're in a Keynesian inflation model driven industry. Our debt is 2.6 times higher than in 2008. So we're over-debted. We have this crisis. We can't issue more money. We can't afford to do so because we reached the barriers of our monetary system. So hence we got to change. Yeah. We can't use consumer expenditure as a way to accelerate the economy anymore, because there is nothing consumers will want or have to spend anymore in the next 18 to 36 months. So yeah, I think we really are going to see some social change because it's unavoidable. We've grown the habit after 80 days of working at home. We're going to grow the habit of cooking from our own house. Why does the economy collapse? Because we only buy what we really need. Yeah, that shows that there's waste, and wherever there's waste, there's a market correction that's going to happen. Yeah, and big or small, it will. And I'm not a pessimist. I'm an ultimate optimist. So I see that this is the moment to change some of these things, like with basic income, through new technology, different ways of financing, releasing liquidity that are built in large assets pools and real estate, and release that money to do the work of circulation again and drive our economy. Also on an environmental point of view, it's probably, I don't know whether any of you have booked recently an airplane ticket, but I tried to do it because I have an office in Israel and I wanted to go. But let's just say there was a slight price increase to that ticket. Yeah, so that basically means it's no longer affordable for everybody to actually do these things. And nobody knows how long that's going to last. But if the prices are up and income for a lot of people is going to go down, I think it's really logical what's going to happen. And, even here in Europe versus there's differences on a country by country basis. But if you see the numbers in the US, it's quite terrifying, I think, what you see from an unemployment perspective. In Europe, the numbers are a little bit hidden because of all the subsidies and things like that, but a lot of people are at risk, at least. We keep them in companies. A lot of companies like airlines, etc., are at risk to becoming state companies. because they go back to the universal model because we can't refinance them like we took over banks 10 years ago, 12 years ago. We're now going to take over travel companies, airlines. Where are we going to stop? Yeah, and Amazon might have hired maybe 100,000 people, but if nobody can buy because 30% of the population loses half their income, then still Amazon is going to suffer because of that, and they will decline. So, I'm in that sense, I do feel there's a lot of reasons why we are going to change socially and in the way we do things, we do business. Now, the problem with the prediction is that it might happen, but it will always turn out in the practicality in a very different way. Yeah. So what I'm very curious about is how this path is going to unfold itself. Yeah? And as an entrepreneur, I find this the excitement in times like these to explore where no one has gone before, to put it like that, right? Like in the Star Trek phase, and we're not going to Mars. By the way, SpaceX is launching tomorrow or one of these days the first sort of commercial space thing. So things are happening, right? But I don't think it's the question whether it's going to change. I think what is going to be interesting to see how the change will apply. Yeah, how much more will we cook at home? How much less will we buy? How much more, let's say, environmental friendly clothing we're going to buy rather than cheap, $2 t-shirts and $3 things made in a sweatshop in China, yeah? Are we going to make handmade clothing again without brands that are timeless, that can last 25 years and still look good after 25 years? Is that ever going to happen? I hope so, but
right. So Zak, I want to ask you, from an alternative data perspective, are there ways that we can sort of identify some of these trends, some of the ideas that, predictions that Roel mentioned, for example, are any of those things emerging already? And is there an identifiable way to detect them?
We can certainly detect how much they're being spoken about. And so in the past, we can look at how often something was spoken about and in what context it was spoken about. What were the emotions around it? Positive, negative, future tense, past tense, anger, fear, uncertainty. We can really measure previous opinions and actions and then measure those against what then happened. This is how you can backtest this kind of sort of alternative concept of what are lots of opinions and then are these things actually happening? And so we can do that now too. It's a little bit difficult to extrapolate what the world is going to look like, obviously. So we can see that these conversations are happening, but I think even on this panel, we might disagree as to how the world looks. Are people still going to be going to restaurants just because they have learned to cook at home? I know that I, for one, can't wait to eat food that somebody else has cooked, and I don't think I'm the only one. So that makes
two of us here.
Sort of hurry up and go eat at restaurants when people feel that it's safe, but then does it sort of slide back down? Interestingly, this is one of the areas where alternative data can really measure interest. We can look at bookings data from all of these sites that people use to make reservations. So this is, a new form of alternative data, recovery index-based data. So I don't want to guess, I think, using Indexica's data or my own brain as to what types of things will come out of this. Too much, it's just too soon, and it's too hard of a thing to do anyway. There's too many factors in the world. My own intuition, though, for what it's worth, is that we revert to the previous world as quickly as possible, with the exception of areas where we can cut our costs. So I think going into the office is an area where companies can easily cut costs. So if you own an office building, I would be a bit concerned unless population growth evens it out. The hotel industry, I think, is an interesting one. Are people still going to feel that they need to travel to the other side of the world to close a deal, to meet someone face to face? I think yes. I think that's one that people will realize helps. Seeing people face to face helps close a deal. And families are still going to want to travel. There's pent up demand. for that as well. Industrial space, obviously more important than ever now that we're going to sort of go even more quickly into a deliverable world. So those are some that I think are pretty obvious, but every other one could also just go straight back to where it was in a couple of years.
Right. We have just a couple minutes, so I want to direct one last question towards Michael. Michael, are we headed toward a cashless society?
Oh, you totally read my mind. Actually, that was one of the first questions I had almost 5 years ago during my first panel at the IF Expo. I was talking how cashless societies are going to be a trend, and it's going to be essential in terms of all of our daily undertakings, to be honest. And there were a lot of stirs in the crowd saying, well, what about my privacy? What about, where I want to spend money? I remember there was a guy that came out from the crowd and he said, yes, you're talking so passionately about cashless societies, but what about people, I'm not talking about myself, he said, but what about people that want to go to, I don't know, let's say he's married and he wants to go to a strip club, and it's going to be on the statement of his card. So, now you do it through cash. Well, look, okay. People are always worried about things, but yes, I believe, and this is what I have seen, we are heading towards a cashless society. This incident, COVID, whatever we name it, this pause in life, has prepared people to accept it. I mean, the society influence on one of the banking society influence onto this is that, firstly, I mean, it's ridiculous because people are even avoiding cash because of the COVID, because of the you might get the disease. So people don't want to get exchange cash between them to begin with, which is a ridiculous thing to begin with. But then now it's the ease of payment. Everybody's doing everything through their homes. We have seen the governments adjusting a lot towards a cashless society. So all of the transactions which come on a governmental level have been embraced, even in Eastern Europe, where things are less evolved into the government sector. I mean, the Cypriot, the Greek government, we have even seen it in Italy and the rest of the countries in the Mediterranean, that now the governments are taking all of the payments through a cashless means. I mean, for you guys on the other side of the globe, it might sound like a bit ridiculous, but yes, a lot of people were going at the end of the month to pay to the government the social insurances by a check, which is a signed document, which existed back in the ancient era, but still we do it here. Well, so yes, I think cashless society is going to be very, very much positively affected after this incident that we had. I believe we are going to see light, and we're seeing light at the end of the tunnel in terms of fighting and eliminating this disease. But at least personally, how I like to evaluate it and see the trends towards the aftermath, as soon as people are back reestablished to their daily lives, I like to take and the economic impact on the society. I like to see the Spanish influenza incident. So it has a good metrics into the trends of how things might progress later on, which the first thing that we can see is a lot of unemployment. So I do think that a lot of companies are, I'm not just going to say they're going to take it as an advantage to lay off or decrease a lot of their salaries to people, but it is going to happen one way or another, either because we were overconsumpting before, overconsumption, as you guys said before, or because it was a reason to shed some of their costs and make some efficiencies. So we are going to see a rise in the unemployment, at least that's the trends we see. That could lead to other market instabilities because demand would be much more lower and spending would be much more lower. Then when it comes to the banking crisis, we already have over-liquid banks. Banks are over-liquid now, and they're not having good enough creditors to be able to take the loans from the banks. So the banks are trying to give out credit lines and to give loans and to the people, but people are not reliable creditors to take actually this money on the lending. So the banks are already becoming over liquid, and they don't have a lot of ways of giving the money out. So this affects, because the banks were not prepared for something like this, this does affect the banking profitability. And this leads to a question, how will the banks react and adapt to this, because the banks by nature, the first means of income was the credit lines that they were giving out. So if there is less and less demand in the systemic retail market for lending, then it means that the income of the banks is going to be decreased and the profitability is as well. So they're going to need to find alternative ways of creating new sources of streams of revenue. And all of these together, so the banks having a new crisis, the society having the unemployment crisis, and then we have everybody being forced into a digital world in terms of cashless society, as you correctly said, is a whole new animal. I just hope that this will not lead to social unrests or any other global instabilities. I'm always on the positive side, as you guys said, but it is a big risk that we need to be prepared. I mean, as we started in the beginning of the discussion, nobody was ever prepared for this global pandemic in terms of closing down the whole market. But there you go, it happened. So I think that we should take a more prudent scenario towards this and be prepared for the worst. And if it doesn't happen, then I mean, God bless. We've got a fresh new day and a fresh new sheet to start and continue from there.
Yeah, wonderful. I think that's a great note to end our discussion on. I want to extend a huge word of thanks to all of our panelists, Roel, Zak, Will, and Michael. It's been such a pleasure to speak with you. I could talk to you guys all day about this stuff. But in any case, to our audience, thank you so much for joining us. I hope you have a wonderful time at the Virtual Vision Finance Expo. Be sure to check out all of our other panel discussions and some of our speakers as well. If we didn't get to your question today, we'll be sure to follow up with you as best as we can. I want to wish all of our panelists a wonderful day, and I hope that we get to meet each other in person in the future.
Likewise. Thank you, Rachel. You've been an excellent moderator as well. It's a pleasure to meet you all guys virtually, and I hope to see you in person soon as well.
Yeah. Thank you all. Thank you, Rachel.
Thank you. Thank you.
Thank you, guys. Take care.
Okay.